Hey guys, this is Chris Mancola with the Mancola Group over at West USA Realty, and I'm doing our weekly market update. And I just wanted to start off by talking about some of the home prices and the way they've gone up. And what we're looking at here is Paradise Valley. Okay, so I'm going to share my screen here with you. Let's check this out. So there we go. Pull this over. Whoops. Okay, so Paradise Valley has gone up 34%. It went from 472 a square foot to 631 a square foot. Arcadia 459 up to 600 a square foot. That's 31% in the last year. Biltmore has gone up 300 from 361 a square foot to 461 a square foot. That's 28%. And North Scottsdale has gone up 348 from 348 to 452. That's a 30% increase. So huge difference in prices from last year at this time. The other thing I wanted to share with you is, let me see if I can get out of this real quick. Okay. Go back to share. There we go. Is our Crawford market update. Now, obviously, these things can change. Oh, wait, before I go there, let me share this one more time with you. So this, hopefully you can see that. Oh, here we go. There we go. Scottsdale has right now at the present moment about 400 active homes for sale, Buckeye 180, and Chandler 160. So those are the highest levels of homes at any given time that from the beginning of this year till now in those areas. Just to kind of give you an idea of a few areas that it's hard to believe that the Scottsdale area would only have 400 homes for sale or Buckeye or Chandler at any given time. That's not for the whole year, but that's at any given time right now, total all homes for sale in those areas. Those are what we're looking at. So we've got a huge supply shortage is the point, and that's what's driving these prices up. Now, some of the lower price points are certainly taking a hit, especially with the interest rates. A lot of first-time home buyers and stuff are having a really tough time. So let's take a look at the Crawford Market Index. I'm just going to use the chart right here that has the whole picture for you. Hopefully you can see that. I'm sharing my screen right now. So I'm still here in case you're just jumping into the video. But this is kind of just the Crawford Market Index in short. And I kind of got it already marked up because I was going over this in another video I did. But basically, this is what it looks like at the moment. Right now, again, if we're at a typically if we're at total market index for the Crawford Market Index or CMI that they go by, 100 is a balanced market, 110 or higher is a seller's market, and 90 or below is a buyer's market. So since we're keeping this short and sweet this week, I just wanted to kind of show you the gauges here. And right now we're at 424.5. So, you know, as of the beginning of this week. So this actually is coming down because earlier this year we were, you know, as high as like 475, almost 500. So that's coming down. Part of that has to do with, prices going up, interest rates going up. And we see that actually, if you look over into right where it says demand index, that's actually in a normal range, pretty much a normal range right now, because as you can see, we're not down in the red there off to the left, and we're not quite up in that hot area up near that 110, 120 area. We're right near that 100 mark. So we're right in that normal range for demand on the buyer side. But the supply, and some of that has dropped dramatically, by the way. So we've seen, you know, those numbers come down because those numbers were as high as like 125, 130. We saw this kind of thing happen a little bit last year, but the difference is we've got higher interest rates right now. However, one of the things that stays consistent is the supply. And that supply just isn't enough. We are at, if you look all the way over to the left, the supply index again is at 24.7. That means we're 75% lower than where we should be on supply. Now, one other thing I want to point out here is in the bottom left here, I've got some numbers circled. And if you look at the overall Crawford Market Index again at 424.5, that's way over 110, which means we're way into a seller's market on average across the board in the greater Phoenix area. Okay, but we've had a 9.5% drop in the last month. And in the last week, we've had a 6.4% drop. Again, a lot of that probably has to do with interest rates going up and continue to rise along with home prices. But we still have, a lot of, basically a multiple offer situation, a lot of people fighting for stuff all the way up into the luxury market. So as I showed earlier, some of those luxury areas are, still going up in price. But sorry about that. If you saw that, I had something pop up on my screen. But they're still going up in price, but in those luxury areas. But we're seeing that, there may be a little bit of a cooling off, but the supply isn't changing with that. So when you have any sort of that supply or demand issue, we're still going to see what we're seeing, and that is the continuing of bidding wars and people fighting over properties all the way up into the 2 million range. Now, over that, maybe when we get into more of the 3 million range, mostly anybody over 2 million is going to be a cash buyer for the most part. In the 3 million range, we see things kind of slow down a little bit more. But that's why I wanted to show you kind of some of those luxury areas earlier. But this indicates that it's coming down, but we're still in a very hot and volatile market. So, we're seeing people with FHA loans having a real hard time, first-time home buyers having a real hard time because the people who are winning out are people who are, corporations or investors coming in with cash offers or buyers from California coming in or other places where homes are much more expensive, and they're able just to waive every contingency, like, appraisal, a waiver, even if the number comes in super low by 50 to 100 grand, they're paying it out of pocket for the property. Or if they're waiving contingencies on loans, or they're cash buyers, or they don't even have to worry about a loan contingency. A lot of them are maybe doing inspections, but they're waiving that inspection period or waiving that inspection contingency, and they may be even making their earnest money non-refundable. So there's a lot going on as far as, the buyers out there right now, as far as what they're waiving. And that's why a lot of these people are having a hard time. They're coming in as a first-time home buyer buying a home. So typically, if someone, is their first time buying a property right now, they're having a really tough time. But there are some ways around that, and we could certainly talk to you about that. One way, obviously, would be to go after a new build. There are some, waiting periods and times like that. But, there are certain areas of town where you can certainly get in to the equity game, as I call it. And there's ways to do that, maybe that you could curtail some of the, not only competition, but also keeping up with the inflation factor. So give us a call, shoot us a text, reach out to us at McCullough.com. And we'd love to be able to talk to you more about how we can help you with that and get into the details of what it would look like for you. We also have programs where you can even buy a home before you sell your current home and get your mortgage covered while you're in kind of influx of all that. So we can kind of talk about that. That would include if you're buying a new home too, and you need to have that home built or it's in the process of being built. So again, 480-788-8569. Make sure you follow us on YouTube and Facebook and Instagram, and we will see you guys next time. Thanks a lot.